Hey, Nate Caldwell here again with another mortgage market update. This week is pretty light with economic news. Last week we got through a few major hurdles. One was the debt ceiling debate. Luckily, the U.S. decided to raise the debt ceiling, which prevented a U.S. default, which would have been terrible for mortgage rates. Also, there was a jobs report that showed very strong labor market. There are a lot of people out there that don't necessarily agree with some of the numbers that were reported based on the unemployment rate going up from 3.4 to 3.7%, but somehow we had significantly stronger involvement in the labor markets. But that's neither here nor there. The mortgage market did react negatively towards this, and we did see rates tick up a bit last week. Right now, 30-year fixed based on mortgagenewsdaily.com, which is a great resource for anyone out there. It's free as well. 30-year fixed 6.9%, VA, FHA both hovering around 6.5%. So as I said, last week we had a few major economic hurdles. This week, pretty light news. The mortgage rates are probably going to be staying in this pretty tight range until next week when we have two of the biggest economic events occurring. On Tuesday the 13th, we're going to have CPI, Consumer Price Index, or inflation reports coming out. Most economists out there believe that is going to show inflation continuing the trend lower. If that's the case, that's going to be very helpful for mortgage rates. And the other big event is on Wednesday and Thursday, the 14th and 15th. The Federal Reserve is meeting to discuss their plans on either keeping rates the same or raising rates. The federal funds rate is not an indication of what mortgage rates are doing, but the Fed's words, how they say them, what they feel the projection of the U.S. economy and rates in general are doing does have an impact on mortgage rates. So that's what's going on this week. Not a ton, but next week we're expecting some major activity. This week we're going to hang tight. I'm floating most of my clients right now unless they're very risk adverse and hoping for better rates next week, and then we'll have an opportunity to potentially lock them in. Any questions, feel free to give me a shout. Any scenarios you have, happy to discuss. Thanks. Bye.